In the wake of COVID-19, all governments throughout the world have been very prompt to inject trillions of dollars in their respective economies. The world economy is a globalized market. There is no physical frontier. Economic interdependence has created systemic shocks to the global economies during the COVID-19 pandemic. The United States, Europe, Japan, China and India have released trillions of dollars in government spending to avoid an economic depression. The U.S. federal government is putting $2 trillion in the U.S. economy to support postponement of mortgage payment for up to 12 months, to save employment and support salaries payments. In UK, £9 billion was released to support 3.8 million of self-employed, £350 billion as state loans guarantees and £29 billion to struggling businesses and $7 billion in welfare system to help pay wages of millions of salaried workers. Latest report suggests that a whopping $7 trillion commitments from governments and central banks will be needed to save the world from sinking into depression. What is the Mauritian government doing? An instant response from the Mauritian government has been the wage assistance scheme. The government has granted a 50% refund to all companies for the salaries of March 2020. The refund is 50% of the basic salary for all salaries between 9,750 rupees and 25,000 rupees. For salaries between 25,000 rupees and 50,000 rupees, a fixed amount of 12,500 rupees will be granted. No refund is available on salaries above 50,000 rupee. There are numerous other measures the government has brought in to help businesses. These measures are directed at two levels: macroeconomic and cross-sectorial level and sectorial. Let us look at each of these measures. Reduction in Key Repo. The Bank of Mauritius at its last monetary policy meeting brought in a 0.5% cut to 2.85% in the Key Repo rate. Companies will have lower debt servicing in terms of interest payment. This rate cut will stimulate investment. Borrowers will pay lower in terms of interest servicing. Bank of Mauritius Special Relief Program, for an amount of 5 billion rupees. This program will run from the 16th of March to end of July 2020. Companies can raise funds at a low interest rate of 2.5%, payable over 2 years. Furthermore, there will not be any interest or capital payments during the first 6 months of the loan. This loan will fund working capital requirement and cash flow crunch in all sectors of activities including manufacturing and SMEs. Small as well as big companies can access this special relief program. Moratorium on repayment of existing loans. Companies affected by COVID-19 can ask banks for a debt servicing holiday, avail themselves a moratorium of 6 months on capital repayment for existing loan. Easing of banking guideline. The Bank of Mauritius will flex credit impairment policies imposed on commercial banks to incite them to lend to companies and enterprises facing cash flow and working capital stress. All banks have to make a day one provision on the loans and advances to their clients. The Bank of Mauritius will adopt more flexible guidelines in terms of expected credit loss calculation. Equity Participation Scheme. State Investment Corporation will participate in the equity of companies to alleviate financial difficulties. An amount of 2.7 billion rupees is allocated under this scheme. Investment for modernization of production. The currently available Enterprise Modernization Scheme run by the DBM will attract a reduced interest rate from 3.5% to 2.5%. SME Factoring Scheme. SMEs may benefit by having money advanced to them on selected debtors. This is called factoring. The rate of interest on factoring is reduced from 3.9% to 2.5%. This measure will reduce the accounts receivable days and relieve cash flow strain. SME Equity Fund. SMEs raising money from the SME Equity Fund will require only to pay 3% instead of 5% as returns when the fund invests in SMEs. It is a government-sponsored fund that invests in the capital of SMEs for a defined period of time before it exits. DBM Revolving Credit Fund. Companies with a turnover of less than 10 million rupees will benefit until the 31st of December 2020, an interest-free credit repayable within 9 months, else commercial interest rate shall be applied. The fund is operated by the Development Bank of Mauritius and an initial amount of 200 million rupees will be set up. Revolving fund meaning that it will always be maintained at 200 million rupees double tax deduction on investment. Companies which have been affected by COVID-19 shall be able to claim twice the capital allowances for all investment in plant and machinery from 1 March 2020 to 30 June 2020. Foreign labor. All companies employing expatriates whose work permit expires this calendar year 2020 will be able to keep the expatriate till December 2021. This will reduce burden on the companies having to apply for renewal of work permits. Specific SME scheme launched by SME Mauritius. SME Mauritius has put in place 5 schemes, namely, A. Internal Capability Development Scheme, B. Technology and Innovation Scheme, C. SME Marketing Support Scheme, D. Inclusiveness and Integration Scheme, and E. SME Utility Connection Assistance Scheme. These schemes allow SME to benefit from grants towards capacity building, technology and innovation, marketing support, and many more up to a maximum of 150,000 rupees. A panoply of sectorial measures for tourism, health, manufacturing and trade, and agro-industry have also been announced. This was brought to you by Oregon Consulting Limited. Do you want your businesses to get a fast recovery after the trauma of COVID-19? Work with you, and we guarantee a fast turnaround. We will accompany you all the way to benefit from these support measures put up by the government. Contact Oregon Consulting.